Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 11th of November, Wednesday. So as usual, in our market briefing, we will cover three parts, namely the fundamentals, the news release, and the technical analysis. So without further ado, let's start off with the fundamentals. When we take a look at yesterday's market movement, we can see gold rebounding by 0.83%. The pound also climbed higher against the dollar as much as 0.83%. The dollar index inched lower by 0.03%, and oil extending gains by 4.94%. So let's get into further details with the headlines of today. First off, let's talk about the oil, where we can see the crude oil second day rally had led the commodity higher above its previous resistance zone near $41.5 per barrel handle. Now the market continues to be cheering on Monday's vaccine news, where investors are anticipating a strong recovery in oil demand following the release of the vaccine. Now furthermore, China's robust economic recovery also led to a higher oil demand ahead, while OPEC and its allies continues to produce less than the market's demand. So overall, we can see fundamentals are supporting oil prices to be higher. However, as we speak, the commodity is very dependent on the news of and also the developments of the vaccine. So if there's no vaccine in the market, the sentiment for the oil market would definitely fall, and we can see prices revisiting the $30 per barrel handle in the previous months. So instruments involved here would be crude oil itself and also the Canadian dollar, where Canada's economy depends highly on the prices of crude oil. Moving on, let's take a look at the second news, which is about the pound, where we can see the pound has actually surged on the Brexit and also the vaccine hopes. Now the pound was one of the market's major winners throughout last week, with the US election pressuring the dollar lower and supporting major currency assets. So pound's recent bullish strength also came amid hopes for an effective vaccine that would support a more robust economic recovery, leading investors away from safe havens into riskier markets. Now furthermore, optimism for a Brexit deal by the end of the month also prompted up demand for the currency. So all in all, we can say that the fundamental is also supporting a higher pound. However, it is also very dependent on the progress of Brexit talks. Now since previously the rally was supported by a weaker dollar, investors now will focus mainly on the developments of the vaccine and also Brexit. So if there will be no deal by the end of this month, we can see selling pressure coming back to the pound market, and we can see it revisiting lower levels for the pair of GBP USD, where we will cover more on the technical part later on. So instruments involved here would be pound itself. So moving on, let's take a look at the news release for today. So please take note, time stated here are at GMT plus 8. So the first data would be the interest rate decision from the Reserve Bank of New Zealand at 9 AM. So the interest rate is widely expected to remain same at 0.35%, but what investors should focus on would be the rate statement and also the press conference at 10 AM. So from the rate statement and the press conference, investors can actually obtain a clear outlook on New Zealand's current economic performance, given the recent rise in the COVID-19 infections, and to see how the central bank would react and what actions it will take in order to further support New Zealand's economy. Later on at 9 PM would be the ECB president speech from President Lagarde, where we can also obtain a clear outlook on how the Euro's economy is progressing and what actions or what highlights that the central bank will deliver during the speech to further gauge the movement of the euro. So that is all for the news release. Moving on, let's take a look at the technical. So here's an overview of instruments to be covered. First off, Euro Japanese Yen H4 chart showing an uptrend. GBP US dollar H4 chart also in an uptrend. For the Australian dollar against the Canadian dollar, H4 chart also signaling an uptrend, while for oil in its H4 chart also in an uptrend. So let's get into details with the chart analysis, starting with the Euro JPY. So for the pair, constructing the Fibonacci from the previous high towards the low, we can see that the pair last night has actually succeeded in breaking above the 61.8 Fibonacci near 124.3. Although MACD is signaling diminishing bullish momentum, however, we can expect further upward potential for the pair all the way towards the resistance of all the way towards the resistance of 125. So as the pair retests the 61.8 Fibonacci, cautious investors are advised to wait for further confirmation to see whether or not the pair is able to break below. Now, if the pair breaks below the 61.8 Fibonacci, aggressive investors are advised to consider short positions. Stop loss should be placed 30 pips from the entry point, and a take profit should be targeted all the way towards the 50.0 Fibonacci near 123.7. However, if the pair fails to close below the 61.8 and shows signs of rebound, cautious investors can then consider long positions. Stop loss should be placed 30 pips below the 61.8 Fibonacci near 124, and a take profit targeted all the way towards the resistance zone at 125.00. Moving on, for the pound and its H4 chart. Now, previously we have covered for a Fibonacci from the previous high towards the low over here, and we have also discussed a resistance somewhere near 1.3260. Now we can see that the pair has successfully broken above the 61.8 Fibonacci near 1.3170 and is currently testing towards the resistance at 1.3260. So overall, MACD is still in a bullish momentum, so we will wait for further confirmation whether or not the pair is able to break out above the resistance level. Now, after the breakout, cautious investors are advised to consider long positions. Stop loss should be placed 40 pips from the resistance level at 1.3220, and a take profit targeted 80 pips from the entry point at 1.3340. However, if the pair fails to break above the resistance level, aggressive investors can consider some technical correction trade and enter into short positions. Stop loss should be placed 30 pips from the resistance level at 1.3290, and a take profit can be targeted all the way towards the 61.8 Fibonacci, or to be even higher or safer would be 1.3200. Moving on, for the pair of Australian dollar against the Canadian dollar and the H4 chart, constructing the Fibonacci from the highest point here towards the lowest point, we can see that the pair is currently testing towards the 61.8 Fibonacci near the psychological level of 0.9500. So the next resistance could be targeted from the previous support to resistance, and also the resistance over here close to 0.9570. So overall, cautious investors are advised to wait for a breakout confirmation above the 61.8 before entering into long positions, where a stop loss can be placed 30 pips from the level at 0.9470, and the take profit targeted all the way towards the resistance level at 0.9570. However, if the pair fails to break above the 61.8 Fibonacci, aggressive investors can then consider short positions with a stop loss above the 30 pips above the 61.8 near 0.9530, and a take profit targeted all the way towards the 50.0 Fibonacci near 0.9450. Lastly, for the oil and its H4 chart, now we can see yesterday's trading has successfully broken above the resistance of 41.5, where the commodity has retested the level for multiple times, one over here, twice, and third, before falling all the way towards the lowest level at 34. And we can see yesterday's trading has actually allowed the commodity to break above the resistance level. MACD signaling bullish momentum suggests the commodity to extend higher. So overall, for the next resistance level, we will need to look into the daily chart, where we can see the highest point next would be during August near 43.8. And further resistance can be set all the way towards the psychological level near $50 per barrel. So overall, crude oil is expected to extend its gains given the current fundamental support. So overall, cautious investors can consider entering into long positions at the current level, 41.7. Stop loss should be placed about 80 pips from the level at 40.9, and a take profit with a ratio of 1 to 2 against the stop loss should be 160 pips from the level, so 41.7 would be all the way to its 43.3. So that is just right below, slightly below the previous high reach at 43.8. So again, cautious investors can consider long positions at current level, 41.7. Stop loss should be placed at 40.9, and the take profit can be targeted at 43.3. However, if the commodity breaks back below the 41.5, it would signal a false breakout, and the commodity might continue trading sideways all the way towards the support zone near 39.3. And aggressive investors can then consider short positions. Stop loss should be placed 50 pips from the entry point at 42, and a take profit of 100 pips at 40.5. So that is all for our market briefing for today. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next time on our market briefing, and happy trading to all.